Tax deduction number 1 is ordinary and necessary. The IRS says that you can deduct ordinary and necessary expenses from your business's revenue. There's 2 parts to this that I want you to understand. Number 1 is, what is ordinary and necessary? And number 2, what does your business mean? What if you don't have a business? Can you still apply this? And I'm going to show you that. Let's start with ordinary and necessary. Ordinary and necessary means if you have a business, you can make money and then pay the expenses for your business before you pay taxes, because if you had to pay taxes on your revenue, not your profits, then you would never be able to make any money, because if you have expenses like your salaries and your rents and your softwares, well, you can't pay taxes on money that you don't have. But this is where the IRS and accountants can get very crafty into defining what is ordinary and necessary for your business. A few years ago, my accountant called me and said, "Hey Jaspreet, how do you feel about G-Wagons?" Now, I'm not particularly in love with G-Wagons. I said that they're nice, and he said, "You should get a G-Wagon." I said, "Why?" Because there was a very popular G-Wagon write-off going on, and what this meant is if you bought a $100,000 G-Wagon, you could take a $100,000 write-off from your business. Now, the question is, how is a G-Wagon ordinary and necessary for your business? And this is what my accountant said is, you can say because you're an influencer that you need to have a G-Wagon to maintain a particular image as you run your influencer business. Now, you can start to see how accountants can be very crafty. I didn't go out and buy the G-Wagon because I don't want to spend that type of money just for a write-off, but you can start to see how ordinary and necessary can be a very broad term. Ordinary and necessary expenses could be a portion of your meals and entertainment expenses. It could be a portion of your cell phone expenses. It could be a portion of your home office expenses. It could be a portion of your laptop expenses. It could be a portion of your travel expenses. If you have to fly to Florida and you're looking at rental properties out there to potentially purchase, well, that is a business expense. And maybe while you're there, you get to stay at a nice hotel, you have to eat at some restaurants, and maybe you got to go to Disney World. But if you're going there for business, well, you can deduct a portion of that travel from your business's revenue. Again, this is why it's so important for you to have a good accountant, because they can help you figure out how to use this deduction to pay less money in taxes legally, because if you do it wrong, you could pay penalties, fines, or potentially end up in jail. The second part to this is understanding, what does this business part mean? And there's a few things I want you to understand. Number 1, let's say you have a job, you're working full time. You might say, I don't have a business to take advantage of this ordinary and necessary expense. But what if now you're working full time? Let's just say you're a data scientist and you have a very busy job as a data scientist, but you like gardening. And so you have this idea to start a gardening blog on the internet. So you start this gardening blog, you have an Instagram page, and now you create your own LLC. You create an entity for this business. And now you have expenses for this business. Maybe you have to buy a laptop. Maybe you have to buy a cell phone for this business. Maybe you have to pay for some softwares online. And maybe you have to pay for some gardening tools, some gardening classes to run this business. If you have a loss from this business, this hobby that you're running, well, you could potentially take that loss and offset some of the income that you have from your job to lower your taxable income. Option number 2 is you have this full-time job as a data scientist, as a W-2 employee. Another thing you can say is, hey boss, instead of paying me a salary as an employee, how about you pay me as a contractor? I'll do the same work, but instead of being a W-2 employee, I'll be a 1099 employee. And now when you're being paid as a 1099, well, you can have them pay you into your business account, into your LLC, as opposed to into your personal account. And now if you have expenses to run this business, say a car, say a phone, say a laptop, say a home office, some of these things could be deductible against your business's income, which your boss is now paying you. Now, there's a couple things you got to understand about this. When you go from being an employee to a contractor, you're going to lose some of the benefits that you have at your company. You might not get your company's 401k, you might not get access to healthcare, you might lose some other perks that you have, but depending on how much money you're making, this could be beneficial for you if your company allows you to do that. Option number 3 is you have a business that you're running full time, and now you can use some of these ordinary and necessary expenses to lower some of your business's taxable income. Deduction number 2, you have to understand our investment tax breaks. The IRS says you get to pay lower tax rates when you earn your money as an investor versus when you earn your money as an employee. I'll show you. But this is where I also want to remind you that if you are an investor or want to become an investor, my team at Briefs Media publishes a free daily newsletter called Market Briefs, where we break down what's happening in things like the economy, housing, stocks, crypto, and global markets into a fun, witty, and easy to read newsletter. We have hundreds of thousands of investors that are reading Market Briefs every morning. And when you join Market Briefs, you'll also get my investing masterclass as a bonus, where I'll walk you through how you can get started as an investor and how you can find hidden investment opportunities before everybody else. So if you want to get all of this for free, my Market Briefs newsletter and my investing masterclass, all you have to do is click the link down in the description below. This is how you're taxed if you are an employee, more specifically a W-2 employee. You're going to pay 10% of your income in taxes for every dollar that you earn up to $11,925. Then you're going to pay 10% of your income in taxes for every dollar that you earn between $11,925 to $48,475. Then you're going to pay 22% of your income in taxes up to $103,350. Then you're going to pay 24% of your income in taxes up to $197,300. Then you're going to pay 32% of your income in taxes up to $250,000, 35% of your income in taxes up to $626,000 and some change, and then 37% of your income in taxes on every dollar that you earn above $626,350. This is a marginal tax bracket, which means you're going to pay taxes on your income based off of which bracket that you're in. So if you make $50,000 a year, your top tax rate is 22%, but that doesn't mean that you're going to pay 22% of your income in taxes. That means you're going to pay 10% of the first $11,925. Then you're going to pay 12% on every dollar that you earn between $11,925 to $48,475. And then you're going to pay 22% of your income in taxes for every dollar that you earn between $48,475 up to $50,000. So you're only paying 22% of your income on less than $2,000. But the key thing I want you to pay attention to here is that your top tax rate as a W-2 employee is 37% federally. And by the way, this assumes two things. Number one, this assumes that you're filing your taxes as a single person. And number two, this assumes that you're filing your taxes in 2025, because beyond that, we don't know just yet. If you earn your money as an investor, this is what your tax rates will look like. These are called the long-term capital gains rates. So you're going to pay 10% of your income in taxes up to $48,350. Then you're going to pay 15% of your income in taxes up to $533,400. And then the top tax rate is 20%, which you're going to pay above $533,400, which means as an investor, you have the ability to earn a lot more money and pay less money in taxes, which means our tax code rewards you when you earn your money as an investor, and you're going to pay more in taxes as a W-2 employee, which some people like to say that the tax code punishes you when you are an employee. I'll let you decide how it's phrased. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.